Everybody is waiting for what Powell is going to say tomorrow in Jackson Hole. So today, we're going to talk about tomorrow. Be sure to hit the like, hit the follow. We're going to go through this article, hit some really good points. You're going to want to see all the points. Stick around to the end. It will be worth it. We're going to go after some hawkish points, some dovish points. What's going to happen? In case you don't know, hawkish means aggressive, higher interest rates. Dovish means less aggressive, lower interest rates. And before we dive into this, I want to remind you of something. Powell said this.
One way to say it would be, I think we now understand better how little we understand about
That's
inflation.
not very reassuring.
No,
So that's what we're dealing with. Financial markets are bracing for what could be a very hawkish Jackson Hole speech by Fed Powell. Now that's the title of the article, but it does really good at giving the points of both. I love his faces. He's got some good faces. So, financial markets are bracing for Friday's widely anticipated Jackson Hole speech by Federal Reserve Chairman Jerome Powell, and expecting that he'll signal the continued need for aggressive interest rate hikes to combat inflation despite the risks to economic growth. Now, it's important to remember that markets price in a lot of things ahead of time. Okay, so what the markets have been doing, they have been going up a little bit this week overall, is what it seems to me. Over the weekend, they certainly went down. Friday, Monday, Tuesday, they went down. But then it kind of bumped up, and they were going sideways. Of course, I follow crypto mostly, and crypto's been kind of eking its way up, right? But it doesn't really want to take off or anything like that. But over the weekend, everything dropped. Crypto dropped a ton. Friday, Monday, even Tuesday, stocks dropped a bunch. So that's in anticipation to what they expect him to say, which they expect to be a little bit more aggressive. But do they believe him or not? Let's get back to this. This is something that happened that was a big part of this whole downward thing in price. Ex-Dove turned hawk Neil Kashkari of the Minneapolis Fed said the central bank needs to push ahead with tightening monetary policy until inflation clearly moves down. Now, why this was such a big deal is of the Fed people, the main Fed people, because he runs the Minneapolis Fed. He's in the more dovish camp, period, overall, and he came out and said something really hawkish. So that startled people because that was unexpected, hence, moving on. Fed funds future traders talked about pricing in. We're back to pricing in more than a 50% likelihood of a 75 basis point hike in September, because last week the odds were like 60-40, 65-35 that the Fed was going to do a 50 basis point, 0.5%, 0.5% interest rate hike in September. Now it's shifted that most people believe they're going to do a 75 basis point hike. Hence, the market is looking for a very hawkish tone from the chair, said Deutsche Bank's Tim Wessel, Jim Reed, and Henry Allen. Now, these guys have been around a while. Now, they're bankers, so you can't necessarily trust what they say regardless. But I tend to agree with them here. You can see what the markets did. They priced in a more aggressive, a more hawkish Fed. That's why we had the drop. Now, hopes that the Fed might ease off on its aggressive rate hikes had surfaced on Tuesday, last week, after a round of disappointing U.S. data that included a plunge in new home sales for July. Actually, that was this week. But last week, stuff started to circulate around Tuesday also. Now, one thing that's really important to realize is that we still have a lot of stuff going on here. Inflation is by no way, mean, shape, or form beaten or busted or broke. We still have some real bad inflation, and commodity prices have been going back up. Be sure you stay on this video. Don't leave the video. We have more stuff to get to that you're going to want to hear. Commodities are starting to go back up. Wood, oil, etc., metals, manufacturing stuff. And when that goes up, prices of things go up. Inflation is the raising in price of things, goods and services, but we're going to talk about goods here. So that's really interesting. That was another reason that the market started to take a tumble, because now they're like, wait a minute. They thought inflation had peaked, but now there's evidence, hard data showing inflation may not have peaked. So the next CPI print, the next inflation report that comes out in September, I believe it's September 13th, is one that is going to have some eyeballs on it for sure. It would have anyways, but even a little more so than usual because of that. Check this out. Deutsche Bank's Wessel Reed and Allen, they also wrote in a note yesterday, Powell may well personally weigh the balance of risks towards worse inflation outcomes. They're talking about him talking about that during his speech. Now, gearing up, in terms of gearing up and hedging, I really like this article. The 100-day moving average, so this is kind of a trading perspective, of the S&P 500 is at 4,090. The potential next support zone, okay? If you're not familiar with support means this price is coming down. It's like a floor that holds it and doesn't let it drop lower. It's coming up, it's resistance, okay? So Emons wrote in a note. That would be Ben Emons. He's the managing director at Medley Global Advisors in New York. The call and put options with the 4,090 strike that expires on August 31st are now priced at almost equal volatility. It is a reflection of a market gearing up with puts for an a very hawkish speech, while hedging with calls for a dovish tilt. So they're expecting hawkishness. These options people are positioning themselves for a more hawkish tone, a more hawkish language, but just in case they're hedging, in case it's a little less hawkish than they think, dare we even say dovish. Again, at the beginning, hawkish, aggressive, interest rate up. Dovish, not aggressive, interest rate down. Or less interest rate hiking. 0.75 would be hawkish. 0.5 is even hawkish, but it's still based on what everyone expects. Kind of neutral. 0.25 would be dovish. So the danger with the half-point hike, you want to hear this, Powell's performance will convince the audience that the Fed is serious about inflation with the context of the dual mandate. Now, that's one of the biggest things is the Fed needs to convince the market, the audience, that they are serious. Like, listen, we're serious. We're coming in. Stop with these markets. You're going down. We're taking you down. You're clearly, what you're doing is showing us you're not taking us seriously. We are feeling disrespected. We're getting annoyed and pissed, and we are going to give it to you. That's what they mean here. Think about that. What I just said there, the way I just conveyed it, is exactly what's going on, right? It's like daddy and child, mommy and child, parents and child, Fed's the parent, market's the child. Child saying, we don't take you seriously, whatever. All you do, you just pivot. You don't hold the shit. You just pivot. You say, you're grounded for a month, and then after 2 days, you let us go. Like that type of thing. That's what the market's saying to the Fed. I hope that makes sense. So we still think September, so this is Derek Tang of the Monetary Policy Analytics in Washington. Monetary Policy Analytics, monetary policy. That's what the Fed does. We still think September will be a 75 basis point instead of 50, followed by a downshift to 25 basis points starting in November. Interesting. The danger with a 50 basis point hike in September is that it cuts off the right tail of 2022 outcomes too soon, when the FOMC, Federal Open Market Committee, is trying to convince the market of both a higher terminal rate and a later easing cycle. In other words, they're saying, listen, you're grounded longer than you think you're going to be, and we are going to take away more of your allowance than you think we're going to. Like that. Like terminal rate would be like taking away your allowance, giving you less money. And the easing cycle would be like the grounding period. Like, no, you're getting a month. You keep lipping off to me, you're getting 2 months. Oh, what's that? You don't think we're going to keep your allowance money? Well, tell you what, we're going to keep even more than we said. Like that type of thing. This is literally what's going on. If you think adults aren't just big children, you have not been paying attention to humanity. This is exactly what's going on. Parents and children. Fed, market. Seriously. This is what all this shit is. Hiking cycle isn't over. It's safe to assume one of Powell's objectives will be to communicate that there remains work to be done to combat inflation and the hiking cycle isn't nearing its end. In other words, market, we're serious. This is a big deal. It's not over. And we are not going to do shit until it is clearly over. And then you can go back and play with your friends. The markets. Let them go up. Make your money. The hiking cycle isn't near its end. We're going to keep raising. We're going to keep extending that grounding period. You're grounded even longer. What's that? Oh, another week. What's that? Another week. Oh, what's that? Another week. If you think about the markets like this, it will serve you because it's just a bunch of big babies. Welcome to being human. Going down here, sticking with the hawkish rhetoric, the thought is that he will strongly reiterate the Fed's commitment to bringing down inflation, Powell, and perhaps indicate that outsized rate hikes will continue for the next couple meetings. Be sure to hit the like. Hit that subscribe too. I really want to get to 10,000 subs before the end of the year. Help me do that. Love you. Like that. I don't know what the hell that just was. Main driver, this view has been the main driver of stock sell-off, according to them. Okay? This is basically the market responding to the hawkish tone. I'm serious. It's parents and children. Like this type of interest rate hiking. Oh, whoops. This interest rate hiking and stuff, it's like that. It's like parents and children. It really is. It really is. But this is what we're in. This is what we're dealing with. This is who we are. They're going to stick with this hawkish rhetoric until they're 100% sure it's time for a pause. And that's the end of the article. It did the back and forth, gave the neutral, the hawkish, the dove. But overall, the Fed is certainly trying to say, we are going, you're grounded, mister and madam. You're all grounded. We are cutting your allowance. No, we're not going to give you more. I know we've been giving you many, many billions of dollars for over a decade, and we've been letting you just run wild in the streets with all those crazy neighbor kids. But you know what? And I know that we've never done a damn thing we said that when we said you're grounded, you just kind of get to watch TV for an hour and then we let you go because you were too complainy and you annoy us. And then we just gave you some money because Jesus Christ, get out of my hair. That's what the Fed has been like. And so now the Fed's saying, listen, we're serious. We're serious. You're grounded for a month. Shut up. Go to your room. And Mark's like, no, you can't get it run around. You can't blah, blah, blah. This is what's going on. This is literally what's going on. I don't know another way to say it. Hit the like, hit the follow, hit the sub, whatever the hell it is. Hit the bell. This is what it is. It is parents grounding their children. And it is children. This is what we are. This is what we are, man. This is our financial system. But we like to play grown up, don't we? It's so funny. It's so funny. But this is what's going on. And the market's just saying, no, we don't believe you. You've lost credibility. When we talk about credibility, you're going to pivot. You're going to stop doing this. When things get a little too heated in the kitchen, you're going to say, screw it, inflation's here to stay. Get out of my hair. Go out and play with them. Here's some money. Leave me alone. That's what the market's saying. But, what happened here was, Daddy raised his voice, and the market said, whoa, wait a minute. Yeah, and then after these talks, which he's going to be raising his voice tomorrow, the market's probably going to go, whatever. We're going to go back up. They're going to pivot. They always do that. Blah, 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 blah. They ain't got the balls. Blah, 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 blah. Like, that's what it is. But I think the Fed wants to be taken seriously. To be serious with you, I think they really do. And I think they are, I hope they're smarter than they let on. I think that I think they know that earnings reports, and I think they know we're in a recession. I think they know it's going to get worse. I think they know they put an ungodly amount of money into the system over the past decade plus, and they know it's got to work itself out. Plus, we have quantitative tightening coming, right? Taking that allowance back from the kids. And it's going heavier than, I don't know if it's ever been this heavy in my life. I don't think it has. $90 billion a month? I don't think so. So I think they're going to have to stick to that for quite a while, and they're going to have to and they know they're going to have to endure some pretty serious stuff, and eventually they will pivot, but they realize that they've kicked the can down the road for so long, that they can't kick it anymore. They just can't. You just can't kick the can down the road anymore. That's a term that everyone uses. What they mean by that is not deal with the problem. Just print money into it, but the problem doesn't go away, right? Like your kid keeps getting busted for selling drugs and you keep paying off the cops, something like that. And eventually too many people figure out what's going on, and then you can't do it anymore, right? You can't keep paying off them because they realize it's too big of a deal. The neighbors figured it out, the teacher figured it out, your parents figured it out, your neighbors, their friends, the teacher, everyone's figured it out. Like, wait a minute, you can't keep doing this. Your kid's got to go to jail. Your kid's got to have consequences. We have to have consequences of this endless money printing and sweeping the bad economy, poor decisions under the rug. And as we sweep them under the rug, the decisions get even worse by businesses, by financial people, by everybody. And eventually, there's just no running away from it anymore, kicking the can down the road. So I think the Fed knows this. Or at least they will come to know it. And they will stick to this. I think that the interest rate will be high for quite a while. I think that they will do QT, suck money out of the system, $90 billion a month, for quite a while. And I think that they will endure a lot of pain unless a real thing pops up where it's like our actual safety, if some massive catastrophe happens, not economically speaking necessarily, but if a war breaks out or something where it's like, oh shit, pull emergency lever in case of emergency, break glass in case of emergency, then they will. But I think that they are going to stick to this much more than we've ever seen them stick to it. So I think markets have a good chance at going lower, having a whole nother leg down by the end of the year, maybe even by the end of October. Anyways, that's what I got for you. Check out the links in the description. 8:30 Eastern. That's when this goes on tomorrow, 8:30 a.m. Eastern, 5:30 Pacific Standard Time in the morning. Wherever you are in the world, God bless you. All right, hit that like, hit the sub. You're awesome.